I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know this week. New economic data offer an explanation for the pandemic high in consumer confidence we saw in April. Although momentum eased, we saw manufacturing and services indexes both register above 60%. This is the second month above this level for services and the fourth in the last 5 months for manufacturing, reflecting healthy growth in both types of activity. We also saw car sales above 18 million in April for the first time since 2005. These indicators reflect the spreading improvement in activity across economic sectors and perhaps some getting ready for commuting back to work. With business resuming, hiring followed suit. Employers added jobs, although the unemployment rate ticked up slightly to 6.1%. We're now just 8.2 million jobs shy of the February 2020 peak, a huge improvement over the early 22 million job gap. While hiring was widespread, leisure and hospitality, other services, and education industries saw the biggest job gains. And there's still room for improvement. More than 12 million people reported not working or not looking for work due to the pandemic. In other news, jobless claims dropped notably this week. We're still running roughly 2 to 3 times the level of claims we saw just before the pandemic, but this new low is a milestone to celebrate. In good news for home shoppers, mortgage rates slipped again, coming in at 2.96%. Mortgage rates have steadied in the last 3 weeks around 3%, a welcome change for the vast majority of homebuyers who use a mortgage and whose monthly payments can move higher or lower with fluctuating mortgage rates. Despite the dip in mortgage rates, mortgage payments are generally higher than last year, thanks to home prices that continue to move up by double digits. A major driver of home price gains is limited supply. While there are less than half as many homes for sale right now compared to last year, a big increase in the number of new sellers for the 4th week in a row is helping to slow the rate of decline. And this is likely to continue to slow the pace of price growth, even though we're also likely to see new records for the median home listing price in the summer months ahead. You'll find details and our housing data for download at Realtor.com/research. And you can also follow us on Twitter for real-time updates. Stay tuned and we'll keep you up to date.